Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, early this morning in Sydney, the US Federal Open Market Committee, or the FOMC, voted unanimously to increase its target for the federal funds rate by 25 basis points, a move aimed at lowering inflation by making borrowing more expensive for consumers. Despite the recent banking crisis, the US Federal Reserve indicated it was on the verge of pausing further increases in borrowing costs amid recent turmoil in the financial markets, spurred by a collapse of two major US banks. In the statement, insisted on repeating, that is, ongoing increases will be appropriate from Federal Reserve Chairman Jerome Powell, and that is now only views some additional policy firming may be appropriate. He emphasised the shift to May from will. So the increase of the quarter of a percentage point sets the US central bank's benchmark overnight interest rate to 4.75% to 5%, in a range that is, since the highs of recorded back in September 2007, when rates were at their peak in the eve of the financial crisis. So in the projection, the Fed indicate the target could end by 2023, barely above 5%, indicating little room for further increases this year, as we're already there, as I mentioned, at 4.75 to 5%. However, things got a little bit ugly in the markets following the close of US Federal Powell's news conference, which saw very much whipsaw price action after US Treasury Secretary Janet Yellen, who was testifying before a Senate panel, told lawmakers that the failure of small banks could trigger the demise of smaller banks. The failure of small banks, she said, like a community bank, can likewise trigger a run on other banks, and failure of that bank could lead to a systematic failure. She also added that our top priority is protecting the health of the US economy. So as we can see, the price action once again took the challenge to that topside level of 67.35 and was rejected clearly from the challenge, and now puts a little bit more of a dent in the current price action to a bear case, and therefore could see the market tumble away from that 67.35 and look down towards 66, 60, 65. A break there will give us a view back towards 65.90 and reassess from there. The euro very strong overnight as the dollar slipped further. That is, the US dollar, which measures the greenback strength against a basket of six major currencies, tumbles to 102.15, taking out the 103, and now puts more pressure to a target of around 101. This has given further scope to the upside for the euro and put in 109 to maybe 110 in perspective. With the trend holding bullish, we are getting a little bit overbought. No divergence there, so I view that the market will be probably shallow on any pullback and expect a further gain. Looking at dollar yen, we've got an outside range there, or an engulfing candle that supports further downside tests. Having rebounded previously, the market is a little bit on the weaker side, and with the technicals also slowly declining, does put the picture back towards the region somewhere of 131.10 to maybe where the base holds around 129.80 to 130.15, and reassess from there. Sterling, very whipsawed, took the challenge towards that level around 123 and was rejected. And from there, let's put a bit of a mixed view into today's session as all eyes turn to the Bank of England's rate decision, or the Super Thursday, and let's see if they will hike rates 25 basis points. I feel there is a little bit more upside gain, and therefore from 123 or any further rise towards those highs of 124 will find a lot of difficulty and maybe set up a bull trap that could send the market lower back to 122. A rebound in gold, not supportive in my view. The fact is, it could give us the opportunity to see bears come back into the market around 1,974 to 1,980. If so, that would see the market test lower and looking back towards the bottom side around 1,938 and reassess. The market took a challenge high but thought twice about it, but not backing down, and still looks towards the $72 a barrel as a potential target, with any pullback likely to be shallow. Well, that's a wrap for the morning. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.